Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, joined by my co-host Brian London. If you have not already, please hit that subscribe button on YouTube, BitChute, SoundCloud. And it is always my privilege to join you. And we have an old friend of the show, Rich Checkan, who was with us. I mean, he's been with us a couple of times. In the early days. So as our podcast builds up its history, it's great to have one of our originals with us. And Rich is the president of Asset Strategies International. This is a provider of all things precious metals in terms of coins, bullion, and he is also a longtime guest and speaker at the New Orleans Investment Conference. So, Rich, welcome, and yep,
that's good. Good to be back and see old faces again. Can't wait to see you in person in October.
Oh, mate, I think we're all looking forward to it, especially Brian. And Rich covers a lot of topics, but recently he made waves because he referred to central bank digital currencies as being concocted by Satan. And I thought you were going to take a stance on this. What do you mean, mate?
Yeah, obviously, I apologize for being so wishy-washy in my comment that they were concocted in hell by Satan himself. But I truly believe that. I do think central bank digital currencies are pure evil for any freedom lover. No two ways about it. And I don't think it's difficult to see why. All right. From the government standpoint, and there's no surprise that I see China, a government that keeps its people under its thumb, taking the lead on CBDCs. But, the goal here is basically it's not the wonderful world of decentralized crypto that everybody loves. The fact that you can't control it. It's actually the same exact broken system we have for fiat, just delivered in a more efficient manner. And with that comes incredible government control of your finances and the complete lack of any privacy for individuals and their finances. And I don't think this is a good thing, clearly.
Yeah, Rich, it's like the old adage, I'm from the government and I'm here to help. Yeah. If the government is not out to help you do any damn thing in return for a central bank digital currency, it's not transparency. It certainly is efficiency. It's ruthless efficiency in that you will have to pay your taxes. I mean, it all goes towards the cashless society, the goal of a cashless society where your taxes will be extracted and then you can argue for getting your money back. It is a method of control, further control of the government on the economy, on human interaction, your personal finances, etc. And I completely agree with you that that's all it is, and it is another step toward the abyss of tyranny.
Yeah, and we were talking, Fergus, I think you made a fantastic point prior to getting on that, negative interest rates, things of this nature, when the government totally controls your bank account, they'll just extract it. And all of a sudden you have less for giving the banks the privilege of holding your money.
Is this actually happening? I hear a lot of talk about these CBDCs. And of course, the idea is coming forward because central banks are feeling the pressure. They're feeling the obsolescence. They know that gradually these alternative currencies are going to become more practical as a medium of exchange, and they're trying to compete. But are central bank digital currencies actually in function anywhere? What's their status right now?
I don't believe anybody's got them in play. I think China is the closest, but you have Great Britain. There's comments from the U.S. and from other countries around the world that they are looking at seriously adopting such things. And whatever you can do to make that stop, I think would be worthwhile for all of us. The question came up, well, what happens if they do adopt central bank digital currencies? And the follow-on question, if you were, was what happens to Bitcoin? What happens to gold? I think Bitcoin continues to function in a parallel universe. I think it may help Bitcoin with even further, wider adoption. And I think gold and silver actually become your new cash in such an environment.
Yeah, and actually, I recently submitted an article which is not released yet on why cash is still king in Switzerland. And contrary to many Keynesian fears, Switzerland has had deflation for a few years, prices going down, and that means that people actually can hold cash and not be worried about it losing its value. I mean, what a concept.
Unlike here.
Yeah, and so I see a lot. There's obviously is an era of great creative destruction, you might say. And we're always asking, in this era of obviously elevated inflation and perhaps transition away from central bank currencies, if we hope so, why has there not been such a drive towards holding precious metals, at least in the last 6 months or so?
Well, I think don't confuse the price with demand. I can tell you as a dealer over the past year, we've seen incredible demand, year and a half. So back in, what was it, 2019, right? May of 2019, gold broke out, right? It was a long time. It was trading in a range $1,200 to $1,300 an ounce. And it broke out above 1,300 and it ran and didn't stop until 1,550. Consolidated a little bit, was building higher until March of last year, 2020, when the pandemic broke out. And so you have a fledgling bull market in precious metals, which tend to be long in the tooth, 10 years or so, early on, and you threw kerosene on top of that market in the form of the pandemic and the government shutdowns and reactions to the pandemic. And within a month or two, we hit new all-time highs at $20.75 an ounce. And that's not sustainable. It's too far, too fast. And we've been consolidating ever since. So I think that's part of the reason the price hasn't really caught up to what we would expect it to get to. But on top of that, you also have the Fed doing double speak and whatnot and mystifying and confusing people. The last Fed Open Market Committee meeting, or two of them ago, whatever, they all seem to blur together. In the Q&A, somebody threw out his line about, we're beginning to talking about tapering. And somebody threw that in his face and he laughed, he smirked. I wanted to hit him. Maybe I should say that. But he smirked and he said, oh, yeah, I think we need to retire that line. It has served its purpose well. What purpose? To confuse the living crap out of everybody? I mean, I think all they have left are words, honestly. And so far, he's doing a pretty masterful job of using those words, but there's nothing behind it, in my opinion.
You know, Rich, you talk about gold in this long correction since last August, year long at this point. Correction. And, you know, that run up, I think, well, first off, the gold price is set in the paper gold market, in the futures markets by speculators and traders. So all of the rules apply as far as that market looking for the next rumor to buy and the next news to sell, etc. So all markets in general are predictive in nature. So gold, I think, in that run up was predicting the fiscal response, which we hadn't gotten yet. So it's predicting the fiscal response to the pandemic crisis. And then we got that with trillions upon trillions upon trillions of dollars of new spending. And right now, I think the market, number one, as you say, corrected that overextension. Right now, I think it's looking to what's going to happen. It's looking forward, feeling forward for what is actually going to happen with inflation. Will it be transitory? Will we have further reaching effects? What will the Fed's response be to that? Are they going to put off tapering QE? Are they going to put off even further than they already have any rate hikes, et cetera? And how is all that going to work through the system and what the repercussions will be now of all this fiscal spending? I think the repercussions are going to be tremendously inflationary. I think we're in a monetary based type of bull market that we've seen historically and twice in the 1970s and the early 2000s, the kind of thing that's going to last 5, 6, 7 years. And historically, in each instance, has taken the gold price up say about 7 to 8 times from its lows of that period, which implies far higher prices down the road. So that's where I think we are. Where do you agree with that longer term? I think you probably do, but I'm curious what you think we're looking at shorter term as we kind of barrel toward the end of the summer doldrums and start to enter what is historically from a seasonal perspective a stronger period for gold.
No, I agree with you. I clearly we're seeing that now. So I mentioned earlier that, don't confuse investor demand with the price of gold. Demand for a year and a half has been incredibly strong. I will tell you, over the past month or so, it's pulled back a bit. And I see that ourselves, I see that with other retailers, I see that with other wholesalers. So there's a lot of people right now just kind of waiting on the sidelines, seeing where things go. And I think you're right. They're looking for some sort of direction forward. I think we'll start to see it move up as we move back out of the summer doldrums, so to speak, and get into the traditional buying seasons, both for jewelers and for the wedding season and for the holidays. And investors are just getting back to working in front of the screens and taking care of business. I mean, we see all that materialize typically in the fall. I don't think we run to the moon. This summer, the summer of 2021 is a horrific 50-year golden jubilee of the temporary, with air bunnies, closure of the gold window by President Richard Milhous Nixon. Happened mid-August back in 71. And there's, a lot of talk I've seen in the opinion columns of the Wall Street Journal and other places where they're talking about the gold standard versus the Fed managing the fiat currency. I believe inflationary pressures are not transitory. I think a lot of smart people out there saying, forget about 5%. That's nothing. Think what happened in the 70s. I think we're going back to that, and gold will respond, in my opinion. When? I don't know. In the meantime, I think right now it's probably the most underpriced asset out there and probably the best value for a portfolio.
Yeah.
Go ahead.
Okay, well, I'm surprised that the inflation, since we're experiencing inflation now higher than perhaps since the early 80s, I'm surprised this hasn't spooked more people, that it's not getting more headlines. Why do you think that is?
I think part of it is they're confused. As I mentioned earlier, I think part of it is maybe there is some offtake, and you can see some of that money going into Bitcoin or some other assets. Let's face it, the Fed has created a bubble of everything, right? I mean, when you see people putting money into incredibly silly things, and a lot of it, it means that they just believe things can just keep going up forever. So they're putting it across all sorts of asset classes. And right now, I think gold is losing the battle for potential profitable return. When it really gets bad and people start realizing that it is bad, I think they'll move back to the safe haven of gold. But right now, I think greed is overtaking fear. I don't know your thoughts, Brian.
Yeah, the issue right now is actual inflation, present inflation, or even looking backward 1 month with the CPI is at those levels that we haven't seen for many years, and actually real combination with low interest rates. The real yields are at minus 3-4%, which approaches those levels we've seen at historic peaks in the gold price in the 1970s in particular. So it is really extreme measured by the CPI. The problem again is that the gold price is set by these speculative traders in the paper metals markets in the futures. And they don't look at the CPI as a gauge of real yields. They look at inflation expectations as judged by the break-even rate on the 10-year yield, 10-year treasury yield. So that if you look at that, that's basically pips minus the 10-year yield, getting the break-even rate, the expected or presumed rate of inflation going forward. That is still low. It's higher, but it's nothing near where the CPI is, because the market is looking forward and trying to predict where inflation will be. In effect, the market is believing the Fed, and assuming that this inflation is transitory. So right now, the bond market, which is very smart, of course, is believing that the Fed has things under control. Once we get a sign that it isn't, that inflation is not transitory, I think you're going to see inflation expectations soar, and then you'll see real yields, as implied by those inflation break-evens, are going to plummet, get more negative, and that's when you're going to have the big boost in the metals. But Rich, you mentioned something, that demand has tailed off a little bit for physical metals. And that implies that premiums have come down a bit from their sky high levels, and that metal is actually, bullion is actually available. Whereas for a while there, it was not, as we saw during the various silver squeezes and when they just started these big stimulus spending plans. This is really, I mean, if we're getting into advice for our listeners, this really is the time to buy, isn't it? When the pot comes off the boil a bit in the physical metals markets.
Yeah, it's the perfect storm. You have prices that I think we can all agree are lower than they ought to be, right? So again, I think just from
metal itself, right?
What's that?
For the metal itself.
For the metal itself. So the spot price is low.
Yeah.
So that's an incredible level to be buying well. And premiums are coming down. Delivery times are coming down. So, typically, a year ago, we had people asking for metals, and we're like, 8 weeks in some cases, depending on what type of metal to get it in your hands, because that's how exceedingly, powerful the demand was. Mm-hmm. Now, not a problem. I'm having it out the door in a week if you pay me with a wire. So it's all moving a little bit faster. The other thing I'll raise is, I keep hearing talk about the strong dollar, and it's hard for me to understand a dollar at the US dollar index of 92, below 95, which is typically bearish territory for the dollar. People continue to refer to the dollar as strong, but it's that old adage. It's the cleanest shirt in the dirty laundry bin. It's the best looking horse in the glue factory. The dollar compared to other currencies is still relatively strong. And I think that's also, a little bit of a negative or headwind for gold, because gold is looked at when confidence in the dollar is waning oftentimes. And right now, as low as it is, it's still looked at as strong. So for what it's worth.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
Hi, this is Brian London, and I am here with this week's CEO interview for the Gold Newsletter podcast. As always, we featured the CEOs, or the CEO of one of the companies in the Inventa Capital Group, which is the sponsor of the Gold Newsletter podcast. This week, we have the pleasure to welcome back Michael Connert from one of the first gold conferences in effect here at post-COVID. And he is going to update us on Vizsla Silver, symbol VZLA, on the Toronto Venture Exchange. Michael, you are coming out of a hiatus in exploration and drilling due to COVID, and started, I guess, at the beginning of September back to drilling, but had a bunch of backed up assays because you are employing one of the most aggressive drilling programs in the world today, even for a major company, much less a junior, with 10 drill rigs operating on your Panuco project. So lots of news coming up that has come out over the last few days. Can you give us a brief update on that and what we have to look forward to in terms of news flow?
Yeah, definitely. So, we had to shut down for about a month. The reason we did shut down is, we're compelled, and we really wanted to be clear that we put our employees and our communities that we work in, their health first. And so it was the worst wave of COVID that that area of Mexico had seen. But our team was healthy and safe during that time, which was what matters. So we shut down for a month. Now we're restarting and going right back up to 10 drill rigs on the property. So, it didn't slow us down really much at all. And it actually gave us an opportunity to take some time and think about what we were doing, do desktop reviews, training, safety training, all that, really important stuff. So it was a great time for the company. And during that time, we put out a number of, releases as well, too, that just show that Napoleon is growing. The grade is growing. It has an excellent average width. And we've also, shown that we're moving towards an initial resource now in Q1 of 2022. So it was a health and safety shutdown, but we used it for the company's benefit. So it was in an excellent position that's put us in.
Yeah, I'm looking forward, as I think a lot of people are, to that maiden resource estimate. I think back nostalgically now, I guess a few short months ago, when the Napoleon vein was only a couple hundred meters in strike. And now it's over 1,000 meters, and that in combination with the Hitos, isn't it all over 1,500 meters of strike so far? And still not closed off, still wide open in both directions, and to depth, considerable depth. So this is, I guess we're looking at obviously a rapidly expanding resource with 10 drill rigs, but how are those drill rigs deployed right now on those main prospects and other ones?
Exactly. And that's, that's the question that people are asking us here at Beaver Creek. And, we're doing 2 conferences now in precious metals and Denver. And, the topic has really been the resource drilling and the location of the drills, where we're adding ounces. But you're right. So Napoleon the resource area is only a kilometer, but it's not only a kilometer. Kilometers a large strike,
really
but
long,
it's only 1 kilometer of 2.5 kilometers of overall strike of Napoleon. So Napoleon can get a heck of a lot bigger. But the area that we put the averages out on is just 1 kilometer of 2.5 kilometers just on Napoleon alone. Now, looking at Tajitos, we put out, just under 600 meters of strike there, 250 meters of depth, 3 meter wide vein and 0.5 kilogram of silver equivalent. Now, Tajitos is only, 1/3 of the overall strike that we see there at that vein corridor. Now, here's the crazy part. That's 1.5 kilometers of strike there, but we have over 80 kilometers of vein extent that we know about in the district that's vastly undrilled, and we're finding more veins as we go. So the project's getting bigger, the resources are getting bigger, and it's an exciting time for Vizsla.
Yeah, I keep returning to the phrase "scratching the surface" here, because you've obviously outlined a tremendous resource and a high-grade resource, and a silver resource occasionally tainted by high-grade gold in the mix here and there, which I hope doesn't cause you to change your name yet again to put gold into the name. But it seems like at every turn you're finding that not only high-grade silver and gold, but that it extends to depth, that it is consistent, and then you're finding more veins. So part of this program, part of the exploration program, is also trying to test outlying targets, some of these other vein and mineralization expressions that you see on Panuco, which is an extraordinarily large project in itself. And anything you find, of course, you've got mill facilities, et cetera, that are part of the package deal that you just lined up. So it's not like, will this project be developed? Whatever you find seems very likely to go into a mill and into a production scenario fairly quickly. So this resource coming up early next year, what's the next step after that? If you can let us know some vague timelines, or at least what you're projecting ahead after that.
Well, one of the key things to emphasize here is that we're going to continue to drill. When the resource is published, the resource is going to be the first resource. We're going to continue to grow that resource by drilling. So drilling is foundational to what we're doing here at the district. But in the background and, quietly, I guess, suppose, what we're doing is de-risking the project towards production. So metallurgical testing, we should expect some news out on that towards the end of this year. Trade-off studies on the mill, looking at, okay, do we use the El Coco mill, or do we build a central plant, or how do we kind of optimize the production facilities and path forward? Because our intention is to become a very large producer of silver and gold. And we were fortunate enough to be introduced to this district when silver was $14 an ounce, and by this district. I don't think it'd be possible today because it's a district that makes a lot of money, and the existing vendors, when they were operating it, at these silver prices, were quite happy. But we were able to close the deal, the option. We own the property 100%. Now we own the mill 100%, and now we're able to go forward and de-risk the project towards production. And our intention is to build a very large silver and gold producer out of the Panuco camp.
Yeah, it's very rare in the junior mining exploration and development game to see a company in a project with such a clear and steep upward growth curve ahead of it. I mean, your comps now aren't other silver explorers. Your comps are rapidly becoming the large-scale silver miners, and that implies multi-bagger potential from these levels, as successful as you've already been. So tremendous upside still ahead, but also the security of some downside protection because that resource is so obviously large at this point and will be coming up with lots of catalysts in the near term. Michael, thanks so much for joining us this week. Really appreciate the update as always on Vizsla. Exciting news in the recent past and more exciting news to come with lots of results coming up. Thanks again.
Yeah. Thank you, Brian. I appreciate it.
Yeah, and you mentioned the upcoming anniversary. I would like to make the point that we mark that as the 50th anniversary of Gold Newsletter. That August 15th, when Nixon closed the gold window, that's when Jim Blanchard decided to essentially start a newsletter to advocate for the legalization of gold. And it's kind of a convenient date, but that's when we mark the start of Gold Newsletter. So our 50th birthday is coming up now within days.
Happy birthday. And that is a positive 50-year jubilee, unlike the temporary the temporary closure of the gold window is about as temporary as transitory inflation right now, in my opinion. So
great point. So what do you believe that comes out of the Fed then these days?
Honestly, not a whole lot. I mean, we look to them for direction. Everybody in the world hangs on every word, but they're not saying anything, Brian. I mean, I listen to the Q&A afterward. I listen to their comments, and people are looking for cues as to where they might go from here. The answer is they're going nowhere. When they come out and people ask them, what is the measurable thing that you're looking for to maybe start raising interest rates again? And the answer, I believe, if I get this right, was significant forward progress. What in the heck is that? They're saying nothing, and they're keeping us at bay. I personally love transparency, so you can make some decisions that are informed.
Right. And you mentioned the way that the premiums and delays are coming down on coins. What drives those?
Supply is picking up, right? So during the pandemic, the height of the pandemic, you didn't produce metals at the mints, whether private or sovereign, as prolifically as you did prior to the pandemic. There was social distancing, there was shift work. They had clean machines in between shifts. I mean, they couldn't produce like they normally did. Not to mention, how are you going to get it around? Airplanes weren't flying as regularly as they used to. There's no way to deliver it. So there are a lot of supply side things that have been resolved or are getting resolved at this point. At the same time, as I mentioned, demand has fallen off. I think people are sitting on the sidelines trying to figure out where things are going next. You put those two things together, and you don't have to regulate that demand with a higher premium anymore. You don't have to say, okay, more business is coming in than we can handle, so let's jack up the premium and kind of put a governor on that rate of business. That's coming back down as people have inventories. Wholesalers have inventory again, and they can sell and get it out the door.
And what proportion of the coins are minted here in the United States or in Canada versus, say, Australia or South Africa or the major players?
Well, I don't have the raw numbers to give you the exact percentages, but I will tell you, typically every year, the gold American Eagle and the gold Canadian Maple Leaf are 1 and 2 in terms of worldwide sales. So
Right.
I would say the majority are coming out of North America, especially for our market.
Sure. Sure.
Yeah, and the issue, as you hinted, was supply chain related, but that's not surprising. When we saw that happen, this happened really a couple of times post-pandemic, but even before that, it happens a few times every 10 years or so, where all of a sudden, for some reason, there's a surge in demand. It's usually some geopolitical event or whatever. Surge in demand in the US primarily, and it wipes out all the available supplies in a flash, because mints, government mints, surprisingly, who would have thunk it, are not good business people. So they do not, it's really more of a just-in-time type of inventory management. It takes a lot of lead time to get bullion in, get blanks made, and et cetera, et cetera. They're just not good at that. So it happens a lot.
And in their defense, for what it's worth, I mean, they're basing it upon sentiment, upon demand. And usually these supply squeezes come after a prolonged period of low investor sentiment, right? So I can look back, I can say the same thing happened during Y2K. We had a supply squeeze. If you remember in the summer of 2015, especially for silver, on the heels of Brexit, being wrangled and finally, solved or settled. You had the Chinese flash crash in August of 2015. All that conspired to create a big surge in demand based on fear in the markets. And prior to both of those episodes, just like before the pandemic, people weren't really interested in precious metals. They were making their money in the bubbles, in the stock market, in real estate, and somewhere else. So the mints keyed off of that demand. They don't want to make a whole bunch of extra product and not be able to sell it, right? So they were basing that on existing demand, and then all of a sudden, double it, triple it, tenfold, whatever the case might be. They're not capable of moving that fast, as you said. There's a bit of a lead or a lag time.
And the lesson for investors at that point is not to buy when everybody's rushing to the coin store, but when prices come down, when premiums come down, and frankly, when there's metal to be had, that's when you're supposed to buy. That's when you should buy, and not when there's a fever erupting nationwide and wiping out all the supplies. Because at that point, in many cases, you just simply can't get any bullion at all.
Yeah, it's interesting. We can see during these times the spot price falls sometimes, and people think I should get it cheaper than I could a month or so ago, and it actually costs them more because of the premiums, and it takes longer to get it to your doorstep. So it's just not the best world for investing. Your dealer's your answer there. They, even during the supply squeezes of the past year and a half, there were moments where something was available to go right out the door at a reasonable premium, depending on what mint surged, and was able to get some inventory available. So talk to your trusted dealer. They can guide you as to what the deals are at the time too, so you don't fall prey to high premiums and long delivery times.
Rich, drilling down a bit, junk silver is one of my favorite ways to buy metals.
Me too.
Can you explain to our audience what that is, and give us an update on where premiums and availability are?
Yeah, so no, that's a good question, and I'm with you, Brian. I love junk silver. Junk silver, first off, definition: pre-1965 U.S. silver coinage, quarters, dimes, half dollars that were minted as currency. Right? It's what we passed around, put in a pinball machine, bought a pastry with at the bakery, etc. So it's just circulated dimes, quarters, and half dollars. But prior to 65, it was 90% silver in content, right? So long ago, that merchandise has been culled from circulation. If you find it, somebody messed up and spent it as a quarter when it's worth a heck of a lot more because of the silver content. It was bought and sold for its silver content. It actually traded on the exchanges for a while, but there just wasn't enough of it to keep that going, so they no longer offer it. I love junk silver because it gives you divisibility in your silver purchases or your precious metals in general purchases. And if I can get that divisibility and not pay a premium for it, it's the best thing ever. Right now, you're still paying a little bit of a premium for that junk silver versus what's normal. So normal is probably, from a retail standpoint, 4 to 6% over the spot price of silver. I think we're still up around 8 to 10, or maybe even a little higher right now. It's been as high. I mentioned the summer of 2015 for silver. It was at 45 to 50% premium. I would never buy it there. It's not worth that extra premium to get that divisibility. But when it comes down, it's great. Now, what affects the price is, keep in mind, they're not making any more 1964 silver quarters, dimes, and half dollars or earlier. So what's out there is out there. And people who have bought it for junk silver, the only way to get it available for new buyers is old buyers have to sell it in the secondary market. When you see range trading like we have right now for a period of time, everybody that was going to sell at these prices has. Everyone that was going to buy at these prices pretty much have. And until you see us get out of range, down or up, you're not going to see new material hitting the marketplace. So premiums start to become more dear in those environments. When the market's moving, typically up, it will unleash other holders of the metal to then sell onto the market, and premiums will come down, delivery times will come down, and so forth. But they can't just crank up the printing presses and make more.
But if premiums come down as prices rises, prices are rising for silver itself. So it's not like you're getting a deal. And in some cases, it's just better to get it in. You know, there are no other silver coins being made that are that divisible in that small denominations. So there is a key advantage for those coins. So again, it's a case of when you can get it, get it. And you have it there. Is there availability right now?
There's availability right now. Like I said, the premium is a little higher than I tend to like. I wouldn't be completely adverse to being a buyer here, but I love it down around 4 to 6% over spot. That's a reasonable level, because then you're actually getting silver in a divisible form at a discount to, say, a silver eagle or a silver maple and things of this nature. Right now, I think you can get rounds cheaper. So those are just coins minted by a private mint instead of a sovereign mint.
Right.
I want to take you back to the price, Rich.
Yeah.
What will it take over the next few months for us to get back to those 2020 highs or even break through those? How long do you think before our perceptions or expectations, what Brian said on the tips market, for those to really make a change again?
Yeah, I as I said earlier, I don't have a crystal ball. I can't tell you at this point in time we're going to be here or there and otherwise. I do think we start moving up. I think we've kind of settled in with gold. I think the support's at 1675, something like that. I'm not a technician. Silver, I think support is $24 to $25 an ounce from here. We're just slightly above it. We just tested it again here not too long ago. So I do think it's up from here. I personally would rather see it move in a slow manner, kind of like the tortoise as opposed to the hare. And I think that's healthier for the markets. There will be dips along the way, but I'm patient. Brian's been in this industry. You've been in this industry. I've been in this industry long enough to know that gold will do its job. Silver will do its job over time. And in the short term, people are going to get frustrated with it. I saw it the last bull market. Gold, for instance, went to $750 an ounce and pulled back to $450, and everybody said, "That's it. The market's over. The bull market's done." Then it turned around and went over 1,000, pulled back to $750, and the same people said the same things, and it didn't get done until it was at 1921. So the bottom line is gold, silver have done their job for millennia. They are the best thing we know to combat inflation. Inflation, in my opinion, is already here, and it is going to get worse. And I don't know a better antidote. So I'm buying well with low premiums at these levels.
Yeah, you talk about that millennia aspect of it, and that's a point I harp on in all of my presentations. This is nothing new. We've seen this happen over and over. or it has happened over and over. We haven't necessarily seen it over millennia. Every civilization overspends its means, and in ancient Rome, it was military campaigns. It was actually welfare and entitlements for the masses, for Roman citizens, and whatever they needed to do to keep the populace happy and peaceful and not overthrowing the emperor. But it is a process of devaluation and debasement of the currency, and it's happened over and over again, and gold and silver always worked out. If you look at today and you look at the debasement of all currencies, but the dollar is closest to our experience and hearts, it is amazing how much money is being created, how much liquidity there is floating around, how, you look at housing prices, you look at any type of equipment, any capital equipment, everything prices are soaring, and wages are coming up right behind that. We're about to go to a money show conference online, Rich, and really, I guess it's a couple of weeks from now, 2 or 3 weeks. And that's going to be the subject of our discussion is inflation, and is it real? What do you think we're going to be talking about in that panel that we're going to be on?
I think everything we're talking about right now, I mean, it's everywhere. I don't know how you can say it's transitory or it's not really here yet. I mean, everything. I usually grab a cup of coffee on the way in at Dunkin' Donuts, right? Put a pitch out there. I don't know if we can do that. But on the way in, I grab my one caffeinated cup of coffee in the morning for the drive in. And I just noticed, I was like, last week it was $2.53 with tax, and now it's $2.75 with tax. And 15 cents doesn't sound like much, but that's what? A good 3% increase in a week. That's significant. Even on a cup of coffee, it starts adding up when everything starts creeping up in price. I've seen it. I guess the people at the Fed don't ever go shopping for themselves and don't do much for themselves, but I see it at the gas pump. I see it with my coffee. I see it when I buy tomatoes. Have you bought a flank steak or a ribeye lately? I mean, the prices are through the roof. Mm-hmm. Not to mention the raw materials, right? So that the components of larger end items that consumers are going to consume in the future, we've seen a spike in raw materials for over a year now. Now, some have come down, lumber and a few others, but majority of them are still elevated from where they were a year ago. And it's 6-8 months ago, Procter & Gamble, Coca-Cola, all these folks were saying, we're passing on those costs to consumers. We cannot just absorb them. And that was then, and they're already continuing to do it. There are more that are jumping in line. I think there's a whole lot more price upward pressure that has to move through the system yet. We're just seeing the beginning of it at 5% transitory.
Yeah, the Fed's original definition of transitory was a few months. And if you've noticed, they've shifted that. Now it's a few quarters. And pretty soon it'll be a few years. So it is a PR game. It is a manipulating and massaging the message kind of a game. Is primarily what they do in justifying, the most accommodative monetary policy in U.S. history.
Hey, Brian, they didn't lie to us. The truth just changed. That's all.
That's it. It evolves. It evolves. So, Rich, you're going to be talking in a couple of months at the New Orleans Investment Conference at our Precious Metals panel. I think things are going to be significantly different then. I think we're going to be in a better environment for gold and silver. I know that a lot of people are looking at the metals making a move in the next weeks, a couple of weeks, or that it already has. It's surpassed the 50-day moving average recently. I'm sorry, the 200-day moving average, and is going toward the 50-day, which is, technically important. I'm a little more cautious. I think it might be another month and a half, or even 2 months before we see that move. But we are confident it's coming. And you're confident you're coming to New Orleans. And can you talk a little bit about your history of our grand event and what you're looking forward to saying there and doing there?
Yeah. Obviously, it's something, and you've heard this before, Brian, but for your listeners, it's an event that we always always want to be a part of. As you know, we've promoted it to our readers and our clients for years and years. Michael, my uncle who started this firm, Michael Checkan, he was at the very first one back in the 70s. And one of us or both of us have been at every one ever since. It's the granddaddy of all investment conferences. It is the start of the hard money movement in the US. And because of those things, we just think it's so important and it must be around forever. This is real money. And a conference that is the granddaddy of real money must always be around. The conference speaks for itself between Jim Blanchard and you, what you've done over the years, the people you've brought in. I mean, Margaret Thatcher, and I can't even give you the full list. There's just so many people. Ludwig von Mises, right? I mean, Ayn Rand, I think, was the
Hayek. Ayn Rand's last speech was at the event, so just before she passed away.
I mean, this conference is amazing, and it's where people come. I guess not to get double talk, but to get the real answers, and that's what we'll be talking about. I mentioned earlier, I'm not a technician. I've been doing this a long time, and everything that I talk about, or some of the things that I profess for the future, are based on just common sense, what I see in the market, see things moving. You don't call a pig a squirrel. If it's a pig, you call it a pig. And that's what you're going to get out of us. I'm going to tell you what I'm seeing in the marketplace. I'm not going to make any excuses, and I'm going to try and deliver some transparency so people can make sound financial decisions. And I think one of the best things you can do right now is own metals. No two ways about it. I do think it's the best asset class in terms of value right now.
Rich, I'm going to continue the shameless plug just a little bit about New Orleans, just because you bring up the history of the hard money movement and how intimately tied we have been since the very beginnings. I have to say that I think we're entering a new renaissance of thought and thought leaders in the sector. Part of it is being prompted by the extraordinary situation and events that we've seen from a monetary standpoint, and even political and geopolitical standpoint in recent years. But there are so many people out there that I think harken back to the old days of the hard money movement, when you had all these great newsletters going around. It was the internet of the day, and obviously slower frequency with the information, but just great thinkers. And I've gone out through social media and various blogs, et cetera, and found all of the people that I think are the smartest people out there. And with the exception of only one, perhaps two, that aren't able to make it this year, they're all coming to New Orleans. So I
thought you were going to say, with the exception of one or two that aren't very smart, and that's how you let me in. But
no, I wouldn't say that to your face, Rich. But really, there's just a couple that actually spoke at last year's virtual event that aren't able to make it for travel reasons this year. But it is an extraordinary lineup that I'm very excited about, very proud of, and I urge anyone to go to neworleansconference.com to look at our roster. And if you don't recognize one of these names, Google them, look at what they've been saying, look at what they've been writing, and you'll see why they've been invited to New Orleans, and you'll get an idea of the kind of cutting edge insights that you're going to get at this event.
Yeah, no two ways about it. It is a must attend every single year for us. And we try to bring as many of our friends with us because I think it's that important. I really do. And you commend it on the what you've done for the over 40 years now. Coming on 50, right? For the Gold Newsletter.
50 years for Gold Newsletter, 47 for the New Orleans Investment Conference.
Yeah, just an aside, the first year I was supposed to attend by myself without Michael was Katrina. So they pulled the rug out from under me, but I was there the next year.
Yeah, I was basically the only one here for that one.
Understood. Broadcasting from the top of your roof. So.
That's it.
Yeah, so you heard it. NewOrleansConference.com is the website. If you haven't been, get there. Otherwise, Rich, your website is assetstrategies.com.
Yes.
Asset Strategies International is his firm. And so thank you for your time, and we're excited to see you in New Orleans, man.
This is a blast. Thank you for having me, and I can't wait to see you in person, like I said. Everybody join us. You must.
Thanks, Rich.
Bye bye.
Bye bye now.